sometimes you can go back and compare markets. I don't do it that often, but Mark Minervini, he mentioned 1962, and I wanted to take a look. And what started happening is that 1962 compares very, very similarly to 2020 with our COVID. So what happened here in 1962 was that you had the Cuban Missile Crisis, and everybody thought nuclear war was going to break out. And I guess you can, if you hit monthly, you can go back and see what the market had done for the prior so many years before that. So if you could put your cursor where 1962 is so we can see.
Yes.
There it
Let's
is.
see.
Yeah, right there.
Here's the
Okay.
bottom in 62.
Yeah, so the market actually really started coming out in in the early 1950s, 52, 53. I think in 1953 is when it really actually got above, if you can believe that, is that it finally got above 1929, the high in
Oh, wow.
1929. And so you had a great move. I mean, you had this great move up until 1962. Then the Cuban Missile Crisis hit, and you got hit very, very hard, and you were down 29% during that Cuban Missile Crisis. Then it rallied, and it actually doubled from the low, 524. It went up to almost doubled. It went up to 1,001 in 1965. And then what happened is then you had a 28% decline from 1001 all the way down to 723. And we'll go to the current example in just a second, but very, very similar. In COVID, if you compare 1962 to our COVID crisis, COVID brought it down 38. And then from there, our markets doubled. And then what's happened since that double in the last, since the high of the beginning of this year, the S&P is down. I guess on the lows was 22+%, but then the Nasdaq is down a lot more than that. And so they both came down. This is what I think we might be getting into is we might have made the low, because the other thing is, if you draw a line from that the low of 735 across, you came right back down onto the high before the Cuban Missile Crisis, right there. Okay, so then and that's where we are right now, in where our market is. The Dow came right down on top of its previous high before COVID hit. And so we're doing very, very, it's sort of a similar type of move. But if you could just maybe go another 5 years out on this chart, just so you can see what happened after this. You rallied up, you got back to highs, but then you came back down again. And then you went back to highs and you came back down again. And you just started doing this. And what was going on during that period, during that 1970s period? Well, there was increased, starting in the late 60s, you got increased spending in the Vietnam War. When you got into the 70s, oil was so much more important to the world economy. Cars were not fuel efficient. The price of oil went up 4 times from 1973 to 1974. In 1979 and 80, it doubled again. And then you also had very, very high budget deficits. And does that kind of sound like what we're kind of into?
Yes.
Where inflation is picking up, and you've got huge budget deficits, and you've got too much spending, and interest rates were low for too long. That might create this type of an environment going forward, where it's going to rally up for a while, and then it's going to come down, up, and it might just go back and forth for a while. So let's go to our market today. Just go back to change the date back to reset to today.
Yeah, David, if I'm not mistaken, the S&P also fell 27% in its current correction.
Okay,
very similar
very
to the post Cuban Missile Crisis market bottom. Yeah.
Okay, so then you can see our markets, what happened in our markets. You know, okay, yeah, and you can go to a weekly, so it
All right.
blows it up a little bit
Yeah.
better. Um, yeah, okay, so you can see the high on this Dow was 29,568, and then you had the sell-off. Very similar to Cuban Missile Crisis. We came down 38%. And then you doubled from there. You went from 18,200 to 36,900. Very, very similar to what happened from 1966. So 1962 to 1966. And now you've come off. You've actually had your 3 waves down. The other thing, yeah, you've drew in the line. That's right. Look how we came back, retraced the whole thing like we did uh, in 1966 when we started pulling back. So so you got very, very similar markets. You had very similar percentage moves. You have very similar economic situations with inflation, budget deficits, crisis, war, spending on war, and things like that. So that's why I think that we've probably come down far enough. And going back, if you go back and you look at what happened after the market came off in '66, that um, that you had it didn't just take off and have this great bull market again. It was kind of a choppy up, and then it went down, up and down, and so a much harder a harder market environment. And that's something that's why you don't chase stocks, and you don't get too enthusiastic, but you let the setups come, and wait for those setups and be patient, and see. But if the 60s and 70s is any precedent for where we are now, this might be something that you keep in the back of your mind of what's going on.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.